to determine the most appropriate transfer pricing method to apply in each of the following circumstances. Then you give reasons for your choice of method. Union Beverages Limited owns cocoa plantations in Ghana. The company manufactures chocolate using cocoa beans from its plantations. The company sells the chocolates to its subsidiaries in China and Netherlands. The subsidiaries package the chocolates and distribute them in Asia and Europe. 2. Paintsil Limited is a Ghanaian resident company and a subsidiary of Warwick SA, a South African company. Paintsil Limited is a contract manufacturer for its parent company. Dent manufactures motors for installation in block making and concrete mixing machines. Stevens Engineering is a South African tax resident company. The company provides management and technical services such as human resources and artificial intelligence technological services to its subsidiary company in Ghana. Excel Textiles, that's IV, is a Ghanaian tax resident manufacturing company and a subsidiary of Rand Textiles of South Africa. Excel buys same products from Rand Textiles as it buys from independent suppliers. Excel does not add any significant value to the products before selling them to independent customers. B. Identify and explain the performance level indicators that can be used as part of the transactional net margin method. That's the TNMM method. Now, let's solve it. Let's delve into it. That's the solution. That's AI, Union Beverages Limited. A resale price method will be considered as the most appropriate method. Why? The subsidiaries in Netherlands and China are most importantly resellers of the chocolates, the same product manufactured by the parent company. They do not alter the products. They merely perform a packaging function for distribution. The cost of the packaging function may be considered when comparing the gross margin data earned by comparable and third parties. When it comes to Dent, the cost plus methodology will be the most appropriate method. Reasons being that Dent, the Ghanaian company, is essentially performing a contract manufacturing function on behalf of the South African. The entire arm's length cost for manufacturing the products can easily be obtained, and as such, the cost plus method is the most appropriate. When it comes to Stevens Engineering, we will apply the cost plus methodology as well. The reason being that the services are being performed by Stevens Engineering for the benefits of its Ghanaian subsidiary. The South African company would potentially charge its Ghanaian subsidiary for the costs incurred in performing the services using an allocation key of labor hours, for example, with an arm's length margin. Excel Textiles, IV. The application of the resale price methodology would be ideal. This is because Excel buys same products from Rand Textiles as it buys from independent suppliers. Since Excel does not add any significant value to the products before selling them to independent customers, it does not purchase raw materials nor semi-finished goods from the associated company before selling to independent companies. The B. We were told to identify and explain the performance level indicators. So the transactional net margin method is one of the transactional profits methods. The method compares net profits relative to an appropriate base. The performance indicators used include I. Net profit is weighted to sales. This is usually used to determine the arm's length price of purchases from associated enterprises that resell to independent customers. The sales revenue that is derived from uncontrolled transactions should not be included in the calculation. Net profits weighted to costs, that's II. This is used when costs are the most relevant indicator of the value of functions performed. In most cases, costs relates to operating cost only. III, net profit weighted to assets. An example is return on assets or return on capital. This is used for certain manufacturing or asset-intensive activities. IV. We can also use Berry ratios. The Berry ratio is defined as gross profits to operating expenses. Berry ratios can be useful for intermediary activities where a taxpayer purchases goods from an associated enterprise and sells them to another associated enterprise. V. Other net profits ratios, such as weighted to retail points, head count, or others. Now we go on to another illustration. A. The Ghanaian government, worried by the rising incidence of transfer pricing abuses by multinational and group companies, introduced new transfer pricing rules and guidelines through Transfer Pricing Regulations 2012 LI 2188. Required. Explain any 4 objectives of the Transfer Pricing Regulations of Ghana. Then I explain the arm's length principle. The objectives of the transfer pricing rules in Ghana was to ensure that Ghana is able to tax on appropriate taxable basis corresponding to the economic activities deployed by taxable persons in Ghana, included in their transactions and dealings with associated enterprises. Also, to provide Ghanaian authorities the tools to fight tax evasion through over or under pricing of controlled transactions between associated enterprises. Furthermore, to reduce the risk of economic double taxation. Again, to provide a level playing field between multinational enterprises and independent enterprises which are doing business within Ghana, and to provide taxable persons with certainty of transfer pricing treatment in Ghana. Finally, to prevent revenue loss to the government. The arm's length principle. The arm's length principle is the principle that the conditions of a controlled transaction should not differ from the conditions that would have applied between independent persons in comparable transactions carried out under comparable circumstances, but be at market price. In the transaction, related party must be at market price. Let's see this illustration where Pyrotechnics Ghana Limited was established for the main purpose of providing marketing and support services to Pyrotechnics UK Limited, its parent company. Pyrotechnics Ghana Limited's expenses are reimbursed with a 5% markup, which constitutes its total revenue. Required. What is the best transfer pricing method that can be used to test this transaction? Justify your response and show how the method will be applied. The most suitable method for the transaction will be the transaction net margin method. Justification: the transactional net margin method examines the net profit margin relative to an appropriate base, such as sales, costs, or assets that a person realizes from a controlled transaction or transactions that it's appropriate to aggregate. That it is appropriate to aggregate. That's put together. This is compared with the results achieved by independent persons of a similar transaction or transactions. The main difference between the transactional net margin method and the profit split method is that the former is a one-sided method that is applied only to one of the connected persons, whereas the latter is applied to all the relevant connected persons. The transactional net margin method requires the comparison of net margins obtained in its related party dealings against either the net margins of the persons dealing with independent persons in comparable circumstances, or the net margins earned in comparable dealings between two independent persons. A search will be performed to identify a set of independent companies that could be used to determine an appropriate arm's length range of return on marketing support services. The independent companies should be in the same industry or similar industry and in similar markets as the tested party, and services rendered should be similar. Again, the search process will involve the examination of the companies in the database, the elimination of comparable companies, and the selection of those companies that are believed to be suitable as a benchmark for marketing support services. As a result of the search, a set of independent companies will be identified as comparable, which may be used as benchmark for the return that Pyrotechnics Ghana Limited should earn from the marketing support services. Another illustration: contractual terms between two persons, both dependent and independent persons, must be examined regarding goods, property, and services. The associates' transactions must be scrutinized to ensure that revenue is not lost relative to non-associate required. How do contractual terms protect revenue in transfer pricing arrangements? So that's another transfer pricing question there. Contractual terms. Now, economic substance governs a transaction. Economic substance determines the result of such a transaction. Contractual terms might provide for a purported allocation of risk, but in the end, economic substance should be determinative of the result. Between the controlled and uncontrolled, are the contracts the same? If yes, it means market price has been used in the price determination to the associate. If there is material difference, there would be the need for adjustment to take account of the difference in the contractual terms under controlled and uncontrolled persons. It is suggested that tax administration should include an analysis of contractual terms as part of the functional analysis. Contractual terms might not be in writing. In that event, the multinational enterprise or the tax administration must deduce the contractual relationships for the parties' conduct and by the economic principles that generally govern relationships between parties.